Good evening, everyone. Happy weekend. I want to welcome everyone to our live sharing class. So, before we officially begin tonight's class, I want to thank everyone for joining. Now, you may ask, why am I so thankful? Now, that is because even on the weekend days, many members and friends come to support us. And of course, you're not only supporting our victory in the overall competition in the Asia Pacific region, but also providing me with great support personally. From my perspective, how can I ever repay everyone's support? Now, I've thought about it for a long time. So, first, I want to share my experience and insights over the years with everyone here without reservation. I must improve our wealth growth plan so that everyone can fully experience our updated and more efficient profit model and bring more profits to everyone. This is what I want to do and what I must do. Now, of course, our wealth growth plan is progressing steadily at the moment. We are actively preparing and arranging this. So please do not worry. As for the later arrangements, I will inform everyone here step by step and implement them when the time comes. Currently, the competition for support numbers, both our Indian team and for me personally, is still very important. So please actively support us and give us a vote with your votes every day. So thank you very much. Okay, so we're going to be moving on to contents today. So today, what are the specific contents that I want to share with everyone over this weekend? So first, I'm going to continue to analyze the market-related contents. Now, on Friday, we summarized and reviewed the domestic stock market in India for this week already. So today, we will observe and we're going to study the U.S. market because changes in the US have corresponding impacts on the global market, including us here in India. Now, additionally, these 2 days marked a significant event for global investors from which we can learn something valuable from. So we will discuss this in detail shortly as well. Now, the fourth one, if we aim to achieve outstanding results in the investment market, it is essential not only to conduct in-depth research, but to also learn from the successful masters in the market. So this is also something that is very important to approach. And for the learning from masters part of the content today, we are going to be talking about Warren Buffett and Berkshire Hathaway. So we're not going to dwell too much into these aspects. I'm going to get into more specific details soon. So please stay tuned. Don't be impatient. And then we're going to wrap it all up with our stock analysis, which we usually do at the end of our class. Okay, so onto our market recap. On Friday, we have already analyzed and reviewed the trends in the Indian market. And then, so today we're not going to delve into any analysis of the NSE or the Sensex Nifty 50 as well. As we all know, currently the United States is the world's #1 superpower. Any changes or turbulence in the US financial market will have an impact on other countries, including India. Now, although India's market is relatively less affected by the US market compared to others, we still cannot ignore the influence of the US stock market on our domestic stock market here. Now, as we already reviewed and analyzed the Nifty 50 and the Sensex on Friday, today we're going to take a comprehensive look at the US market themselves. So let me ask you all a question here. Do you know the 3 major stock market indices in the US that we often mention? What are the differences and the significance among them? So that is what we're going to be breaking down today. All right, so here we have it charted out. So let's take a look at the differences between the top 3 stock indices in the United States. Okay, so number 1, let's examine the Dow Jones Industrial Average, which is the oldest stock market index in the world. It consists of stocks from the 30 largest and most well-known publicly traded companies in the United States. Now, the Dow Jones Industrial Average only includes the 30 largest and most well-known companies in the US, so it does not truly reflect the overall performance of the US stock market, especially in terms of small cap stocks, tech stocks, and the performance of non-US companies. However, it does reflect the performance of these 30 blue chip stocks, which still holds some reference value for the US stock financial market and traditional economy, making it suitable for investors who value stability and dividend payouts. So, as you can see, first row we have the Dow Jones Industrial Average Index. We got 30 stocks in it. It covers the New York Stock Exchange as well as the NASDAQ, and it's been open since 1896. Industrial distribution, it is a balanced index. And then some of the significance, performance of the 30 US chip stocks, and then the US stock traditional industries and economic trends. Now, next up, we got the S&P 500 index, now which encompasses the top 500 publicly traded companies in the US stock market listed on either the New York Stock Exchange or the NASDAQ. Now, these 500 companies are not necessarily the 500 largest by market capitalization, but are selected based on a combination of market value, liquidity, industry classification, financial conditions, and trading history. Now, the total market capitalization of the companies covered by the S&P 500 index accounts for about 80% of the US stock market capitalization, making it significant gauge for the overall performance of the US stock market, indicating whether the market is in a bull market, bear market, or consolidating. This index assigns different weights based on company market capitalization. The higher the market capitalization of a stock, the more weight it carries in the index, thus having a larger impact on the index itself. So, for example, if Apple, the top weighted stock in the S&P 500, increases by 1%, and a stock like UNM with one of the lowest market capitalizations in the index also increases by 1%, Apple's movement will have a greater impact on the S&P 500. So as you can see, second column here, we got the S&P 500 index. Number of stocks, we got 500. Covers in New York Stock Exchange as well as the NASDAQ. Now this one opened about 60 years later, so 1957. Also a very well-balanced index, overall U.S. stock market and economic performance. Okay, lastly, let's talk about the NASDAQ Composite Index, which is likely the most familiar index for investors today. It is a market value weighted index that includes all stocks listed on the NASDAQ Stock Exchange in the U.S., serving as a key indicator for tech stocks worldwide. Now, the NASDAQ index includes over 5,000 stocks covering various aspects of the technology sector. A little off piece is that the NASDAQ 100 index consists of the 100 largest non-financial companies listed on the NASDAQ. Now, both domestic and international, representing characteristics of high technology, high growth, and non-financial sectors, making it a standout among all NASDAQ listed companies. Now, the NASDAQ 100 index is typically the one we commonly refer to. So over here, you can see in the last column, we got the NASDAQ Composite Index, 5,000 companies listed. Market covered is the NASDAQ. It started in 1971. Also very well balanced. Couple significance about it: the U.S. technology market and overall market performance, growth, innovation, and industry trends. Okay, so friends, do you now understand the differences between the top 3 U.S. stock indices? Okay, jumping into our S&P 500. Now, just now, I shared with everyone the differences between the three stock indices in the United States. Next, let's take a look at the most representative S&P index. Now, on Friday, a lower than expected employment report supported the reasons for the Fed to cut interest rates, while also providing evidence of the resilience of the US economy. On that day, all three major US stocks rose significantly. The S&P index rose by 1.26%, while the tech-heavy Nasdaq index rose even higher. But we'll talk about this index later. Now, looking at this technical chart, this index has risen for 2 consecutive trading days, especially with a significant gap up rise on Friday. So closing up about 1.26%. From the chart, it can be seen that the index has broken above the high point of April 29th. According to the Dow theory, the high and low points of each round of price movements have been consecutively increasing. Now, this is known as what? It can already be called a bullish trend. Now, of course, this high point is only for one trading day, so more observation is needed to confirm this level of bullish trend. Nevertheless, even so, we have some reason to believe that the US stock market will likely to continue to rise in the future. At the same time, we can see the high point of the rise on April 29th reached a 50% rebound from the previous price pullback. Now, while this Friday's rebound achieved a higher point, with the high point basically approaching 61.8% rebound level. Now, this kind of substantial rise in a short period often shows strong momentum, and it is anticipated that next week it will rebound above the 61.8% position. Therefore, we can expect that at least in the first half of next week, the US stock market will still perform well. This will provide some support for the Indian stock market and can be seen as a small positive factor for us in the Indian market as well. Now we're going to take a look at the situation of the Nasdaq 100 index. Now, on Friday, after the iPhone manufacturer announced a record-breaking stock buyback, the price of Apple stock surged significantly. With its help, the tech-heavy Nasdaq index rose by 2%, making it the index with the highest increase among the three major stock indices in the US on Friday. From the chart, the rise of this index is undoubtedly very strong. One thing to note is that the index has now entered an important resistance area. Now, on one hand, if we draw an upward channel, the current price is close to the upper edge of the channel. And then on the other hand, at the end of last year and in mid-April this year, the index formed a consolidation range at a high level. The current price is near the lower boundary of this consolidation area, which is certainly a disadvantageous factor. Okay, guys, how do you think this index will perform next? Will it encounter resistance and fall back, or will it consolidate? Or will it continue to rise? I can share my own subjective opinion. Everyone should note that future trend of the market is not set in stone. A market doesn't necessarily stop rising because of some unfavorable factors, nor does it have to rise just because there are positive factors. The greatest certainty in the stock market is its uncertainty, which is the allure of the stock market. Can you all understand this one simple point? My view is that the pressure zone here should not hold back the continued rise of prices. This means that, as mentioned earlier, normally the first half of next week, the US stock market will continue to rise. This pressure area should not be able to contain the price rise. Of course, this is my personal opinion. Ultimately, whether the price of the index goes up or goes down will depend on the market's true performance. So that is a little dive into what the Nasdaq and the S&P 500 looks like for next week. Okay, so we just finished our market recap and the overall situation of our S&P 500 as well as the Nasdaq 100 indices in the US stock market. Now, we hope it could be helpful to everybody. Of course, the analysis of the US stock market is supportive, but not a decisive factor for trading in Indian domestic stocks. This is something everyone needs to understand clearly. So next, we still care about domestic and foreign markets. What major financial news or economic data that have significant correlations with our stock market have occurred? So let's continue. So first piece of news that we're going to be diving into is going to be about India's exchanges spar for dominance in hot derivative market. So let's focus on financial and economic news from India. So data from regulatory bodies revealed that in March 2024, the monthly notional value of derivatives traded on Indian exchanges skyrocketed to astounding 8,737 trillion rupees. That is $104 trillion, more than doubling from a year earlier. So top Indian stock exchanges are attracting investors with new product and lower fees, competing for a larger share of the burgeoning derivatives market, driving a surge in trading activity that has triggered regulatory scrutiny. The larger National Stock Exchange of India and its long-standing rival, the Bombay Stock Exchange, are vying for dominance in the derivatives space by introducing new options, especially the short-term contracts that allow trading with borrowed funds, which have stimulated a fierce options market. Now, according to sources from both exchanges, if approved by regulatory authorities, the NSE plans to introduce options contracts based on key sector indices, including pharmaceuticals and IT indices. Now, what does this indicate for us? The development of derivatives markets can facilitate the growth and internationalization of the Indian financial market. This is crucial for attracting foreign investors, enhancing the international standing of the financial markets, and driving economic growth. This is also why I have always been emphasizing to everyone that influx of more foreign institutions and international capital into the Indian market is one of the important reasons why our company places such high importance on the Indian market. Next up, we got US job growth at lowest in 6 months as labor markets cool. So let's take a look at the relevant information regarding the dynamic market in the United States and the impact on the currency policy of the Federal Reserve. So according to statistical data, the US growth slowed more than expected in April, with the annual wage growth falling below 4% for the first time in nearly 3 years. However, it is currently expected that the Federal Reserve may be too early to start policy adjustments due to the labor market still being fairly tight. The highly anticipated employment report from the Department of Labor on Friday also showed that due to an increase in labor supply, the unemployment rate rose from 3.8% in March to 3.9%. Nevertheless, the unemployment rate has remained below 4% for 27 consecutive months. Data this week indicates a decrease in job vacancies in March. So it's been a little bit over 2 years since they remained below the 4%. So signs of cooling in the labor market has sparked optimism that the Federal Reserve may ultimately achieve a soft landing for the economy and dispel rumors of stagflation, which have been fueled by news of sharp economic growth slowdowns and soaring inflation. The financial markets have raised the possibility of a rate cut in September. So expectations for a rate cut in September in the financial markets increased from around 63% before the data release to about 78% now. So that's about a 15% increase. So Michael Ferroli, chief US economist at JP Morgan, said, "We stick to our call for the first rate cut in July. The market is not there, but we believe that if the next two employment reports showed a continued cooling in the labor market activity, the Federal Reserve will be comfortable walking back some policy restraints." Even the entire global market is closely watching the relevant economic data in the United States. Why? Because the Federal Reserve will adjust its monetary policy based on specific economic data, such as whether to cut interest rates, when to start cutting rates, and by how much. Once the Federal Reserve re-enters a rate cutting cycle, it will have a significant impact on both the US and global stock markets. Now, in the follow-up, we will continue to closely monitor the data in this area and the latest policy developments from the Federal Reserve. So you can kind of see from the US labor market participation, we in 2020, huge drop, slowly climbing back up. Okay, so next we will share about this global investors event. Okay, so for global investors, there was a significant and important event that took place over the weekend. Honestly, such a significant event is closely followed only by global investors, and people outside the industry may not be very aware of it. So, what is this event? Now, this event is the Berkshire Hathaway shareholders meeting held in the investment city of Omaha, USA on Saturday. Tens of thousands of investors gather in the hometown of the Oracle of Omaha, Warren Buffett, the small town of Omaha, Nebraska, to listen to Buffett's market views, investment strategies, and even life philosophies. Now, what kind of company is this company that can attract such great attention from global investors? Besides the company's impressive investment performance, it is believed that Warren Buffett, the Oracle of Omaha, is the most eye-catching aspect of this shareholders meeting. So what is the relationship between Warren Buffett and this company? Some people here may already be aware of the related content, but may not understand it very clearly. Some people may have no idea about it at all, but that's okay. Let's continue sharing. So Warren Buffett's Berkshire Hathaway Q1 operating profit up 39% at $11.22 billion. Since its shareholders meeting, let's first take a look at the company's relevant performance. So Berkshire Hathaway Incorporated announced record quarterly profits on Saturday, benefiting from strong growth in its insurance business and with its cash holdings increasing to $189 billion. The company appears to have sold a large amount of Apple stock. As of March 31st, Berkshire's stake in Apple has decreased by 22% from $174.3 billion at the end of 2023 to $135.4 billion. Now, despite the fact that the share price of this iPhone manufacturer fell only 11% in the quarter. For Buffett, the large-scale sale represents a significant shift as he has long promoted the leadership and market dominance of the iPhone manufacturer. But nevertheless, Buffett still maintains Apple will continue to be a long-term investment for us. Now, it is worth noting a coincidence that on Friday, Apple announced a stock buyback, boosting the company's stock price significantly and even lifting the US stock index. On Saturday, Apple's CEO attended the Berkshire Hathaway's Incorporated shareholders meeting, which may not be entirely coincidental at all. So, what kind of company is Berkshire Hathaway Incorporated? What is Buffett's relationship to this company? Next, we're going to explain in detail what that is all about. So, what kind of company is Berkshire Hathaway? The history of Berkshire Hathaway can be traced back to the Valley Falls Company, established by Oliver Chase in Valley Falls, Rhode Island in 1839. In 1955, Berkshire Fine Spinning Associates merged with Hathaway Manufacturing Company, the latter founded by Horatio Hathaway in New Bedford, Massachusetts in 1888, profiting from whaling and trade with China. Hathaway was successful in the early decades but suffered setback post-World War I due to the general decline in textile industry. After the merger, Berkshire Hathaway had 15 factories, employed over 12,000 workers, had revenue exceeding $120 million, and was headquartered in New Bedford. By the late 1950s, however, 7 locations had closed down, accompanied by mass layoffs. So take into factor that $120 million back then is close to billions of dollars today. Now, in 1962, Warren Buffett noticed the pattern of stock price movement of Berkshire Hathaway after the company closed down its factories and started purchasing Berkshire Hathaway stock. Ultimately, Buffett acknowledged the decline of the textile business and the company's financial situation did not improve. In 1964, Stanton proposed a public tender offer to repurchase Buffett's stocks at $11.5 per share. Buffett agreed to the deal. A week later, Warren Buffett received the offer in writing, but the offer price was only $11.375 per share. So Warren Buffett later admitted that the lowered price made him angry. Instead of selling at a slightly lower price, Buffett decided to buy more shares to control the company and fire Stanton, which he eventually succeeded in. However, this put Buffett in an awkward position. He was now the major shareholder of a declining textile business. So Warren Buffett initially maintained Berkshire Hathaway's core textile business, but by 1967, he started venturing into the insurance and other investment sectors. Today, Berkshire Hathaway has grown into a US-based multinational conglomerate holding company and has become one of the most expensive companies in the world in terms of stock price, currently at about $603,000 per share. Since Buffett took control of the company in 1965, Berkshire Hathaway has generated over 20% annual value growth for shareholders on average. Now, acquiring Berkshire Hathaway, Buffett's biggest stupid mistakes in his investing career. Although Berkshire Hathaway is now one of the most dazzling star companies in the global investment world, the company's development to date has not been smooth sailing. Even Buffett himself has clearly admitted that this was a major foolish mistake that will go down in the history books. So, Warren Buffett's limited partnership started buying shares of Berkshire Hathaway in 1962. Berkshire was a large textile company, but due to the industry's decline, the market trading price of the stock fell below the company's working capital. Warren Buffett eventually dissolved the partnership and devoted himself entirely to Berkshire's operations. Due to the textile industry's downturn, the former vice president of Berkshire, Charlie Munger, saw this acquisition as a major mistake. Buffett himself acknowledged this was a major foolish mistake that will go down in the history. However, by cleverly using the company's excess cash to acquire private companies and buy stakes in publicly traded companies, Berkshire Hathaway has become one of the largest holding companies in the world. Warren Buffett's core strategy is the insurance business, focusing mainly on its large cash position known as a float, which is the reserve fund that insurance companies must hold to meet future claims. Essentially, that this is not allowed by insurers, but can be used to generate investment income. In 2010, Buffett stated that acquiring Berkshire Hathaway was the biggest investment mistake of his life, claiming that this investment caused him to lose about $200 billion in returns. He mentioned that if he had invested this money directly in the insurance business instead of buying out Berkshire Hathaway because he felt offended by someone, the returns would have been hundreds of times greater. So, many times, mistakes are not scary. What is scary is not knowing how to handle and resolve them. This may be the fundamental difference between successful people and ordinary people. So even though Warren Buffett clearly made a mistake and he could have made more money, he turned whatever bad into good. So this part, I'm going to be calling it Learn from the Masters. So about Warren Buffett, I believe people here should all know him, right? He is still alive in the world and is widely recognized as the stock god. So Warren Edward Buffett, born in Omaha, Nebraska, USA, is an American investor, businessman, and a philanthropist. Acclaimed as one of the most successful investors in the world, Buffett is the largest shareholder, chairman, and CEO of Berkshire Hathaway. He was ranked as the richest person in the world in 2008 and the second richest in 2017. According to Bloomberg data, Buffett personally holds 295,000 shares of Berkshire A stock and 79,000 shares of Berkshire B stock in cash. Due to Buffett's unique and insightful investment approach, adhering to the so-called value investing method, the industry in which he invests in stock tends to prosper. Therefore, Buffett is honored by many investors as the stock god. Now, Buffett is also often referred to as the Oracle of Omaha and is renowned for his long-term value investments and simple lifestyle. He is also a prominent philanthropist, pledging to donate 99% of his wealth, mainly to be managed by Bill and Melinda Gates Foundation. Buffett's generous charitable donations set a historical record in American history. Buffett's successful stories are well known, at least in the investment world. And while we may never become masters ourselves, it doesn't hinder us from learning from the masters to further improve our own investment profits. So, next part. Success never comes too late just because you started late. So Warren Buffett, a globally renowned investor and one of the world's top billionaires. But do you know that when he was 21, his fortune was only $10,000? Yet by the time he was 84, it soared to 63.7 billion. So how did he create such a wealth miracle? Buffett's wealth curve. So at 21, he had $10,000. At 25, he had about $140,000. At 34, only $4 million. And at 43, his personal wealth was only at $34 million. At 52, his personal assets were $376 million. And at 58, it surged to $3.8 billion. At 66, $17.8 billion. And at 84, $63.7 billion. From these statistics, it can be seen that over 90% of his wealth was acquired after the age of 60. So success will never be hindered by starting too late, regardless of your current age or financial foundation. As long as we strive towards success, one day we will achieve our fruitful results. Of course, as long as your goal is not to become the next Buffett, then whatever your goal may be, there is a possibility of achieving it. So as you can clearly see here on the chart that I have given us a perfect example, it's about baby steps. So as you can see, up until the age of past 50s, he doesn't really have that much wealth. And then it just skyrockets when he's in his 80s. So it's never too late to start wanting to strive for financial freedom. It's never too late, or don't think you're too old to start or too old to learn. A lot of these successful wealth stories, they had a late start. And these are some of the things that should motivate us to continue to want to be better, start learning. Now, there are only a few major life-changing opportunities. Through the data just now, everyone has already known that Warren Buffett's rapid growth in wealth, his absolute value began in 1982. It was also in this year that his personal assets reached 3.76. Now, it was precisely because of this financial foundation that his wealth growth became unstoppable thereafter. Everyone needs to pay attention to the economic and the stock market situation in the United States at this time. From this chart, you can see that 1982 to 2000, the US stock market also experienced a super bull market. The S&P 500 index increased from 100 points to 1,500 points. That's a 15-fold increase. So everyone here, although this is just a 15-fold increase, it is important to note that this is an index, not specific individual stocks, so you can imagine what kind of market this was. Although Warren Buffett had a financial foundation in 1982, we got to think about it. If the United States had experienced a bear market or even worse performance for more than 10 years after that, could Warren Buffett have achieved what he has today? Do you know? The only market that could rival the performance of the US stock market during this period was the Indian stock market. And the Indian stock market even outperformed this one. What I want to tell everyone is that there aren't many significant opportunities to change your life. When you encounter one, we must grab it and hang on to it tightly. Missing it once could mean missing it for a lifetime. Now, this is very important. Not all opportunities are always going to come. Sometimes we get one in a lifetime. If we're lucky, maybe we're going to get two. If we see one, we must grasp onto it, and we got to put everything we have into it. Okay, so what Buffett teaches us, right? Now, of course, there's a lot more about Warren Buffett's investment philosophy and related investment performances. Before learning about these, let's first think about what insights the master, the god of stock, Warren Buffett deeds teach us. So first, you have to live a long life, right? You have to live long enough. So my friends, more than 90% of Warren Buffett's wealth was earned after the age of 60. Why is that? Because the early period is an accumulation period. So everyone needs to understand a principle here. When you earn 1,000 rupees from 10,000 rupees, your funds have increased 100 times. But the absolute value of the funds is only 1,000 rupees. However, when you use 100 million rupees to earn another 100 million rupees, your funds have only doubled. But the absolute value of earned funds is 100 million. So everyone, think about it. Which is easier, earning 100 times your money or just doubling it? Besides, the larger your base, the more money you can make, right? Secondly, mistakes are not terrifying, okay? They're not scary at all. Strive to turn bad things into good things. Just like what Warren Buffett did investing in Berkshire Hathaway. He jokes so many times, but in his joke, there's some relevance of truth that he himself knew it was a mistake, but he found other ways. So acknowledge your mistakes, lay it all out, and find different paths to make it better. Everybody is only human. We're all going to make mistakes. Third, success won't be hindered by starting late. Concerning investing, there is another saying. The best time to invest is either 10 years ago or now. The past cannot be relived, but today, 10 years later, we can start now. 10 years later, when we look back, we're going to tell ourselves, thank God we started today. So after all, even Warren Buffett's significant wealth accumulation started after he turned 60. So it's never too late. The last one, fourth, personal success is inseparable from the era's background. We are all now facing a super bullish market opportunity in the Indian stock market. This opportunity is no less than what Buffett faced in the American market back then. Maybe even better. What reason do we have to complain that the market doesn't offer us opportunities? What reason do we have to complain about the opportunities that arrived too late? So what I want to tell everyone is that it's never too late to start. So we must start now. So take a little bit of time to digest this, right? So, even for the stock god himself, a lot of his wealth was accumulated in the later years of his life. He was patient, he took his time, and he just slowly grew his portfolio. It didn't matter at what age, he consistently kept doing this and kept building wealth. That is the key to wealth. Now, for all of us, the current opportunity is unparalleled. Our company is comprehensively entering the Indian market, and the wealth growth plan we have prepared for everyone will also further be expanded. Currently, all the next steps are proceeding methodically. We are providing you with an unprecedented opportunity for your wealth dreams, which of course is provided by the market. In this vibrant, potentially filled market, we will strive to give you a pair of wings to soar freely into financial freedom. India, this country with a long and rich history culture, is now showing unprecedented energy and vitality, which I am personally very proud of. As one of the world's largest democratic countries, India's economy is booming. attracting the attention of global investors. In this land full of opportunities, our company is willing to join hands with you to embark on a new journey of wealth together. We deeply understand that everyone has their own wealth dreams and desires to achieve their financial freedom and success. And now is the best time to realize these dreams. We will provide you with high quality services and comprehensive support to help you seize every opportunity, face every challenge, and achieve your wealth goals. Collaboration leads to win-win situations. Our competition for the activities of the Asia Pacific Regional Headquarters had already begun and is currently in the phase of competing for supporters. We also hope that everyone can join hands to support us by voting for us every day. If India is fortunate enough to successfully compete for the location of the Asia Pacific headquarters, the future headquarters will certainly bring more policy support to the Asia Pacific market, especially the Indian market. And we will offer more significant profit opportunities to the vast investors in the Indian market. Now, in addition, there is something I want to tell everyone. Our competition for the activities of the Asia Pacific Regional Headquarters is currently in full swing. But what disappoints me is the number of supporters in our Indian region lags far behind, not only behind Hong Kong, but even behind Japan. This is something I never expected. So in my opinion, at this stage of competing for supporters, India should be far, far ahead. After all, India has the largest population base, and the number of individual investors has been rapidly growing in the past 2 years to 3 years. How are we lagging behind? So please support us more every day. Everyone who have already received accounts, please remember to vote and support us every day. People who have not yet received accounts, please contact the assistant. Then help us by voting for us daily. Once again, for everyone that has already voted, thank you for your continuous support. We are so close. And it would be such a shame if we don't win, right? So guys, if you don't have an account, please reach out. We're so close. We can do it. Let's not let each other down. Okay, next, we're going to start tracking and analyzing the stocks we recommended to everyone before. So I usually like to wrap everything up with a stock analysis on things that we've been touching base on. So on Friday evening, we have already shared some of the stocks. Today, we're going to continue to look at other stocks. The price changes of the next two stocks are actually not significant, which does not have much impact on the original upward trend. Although the stock prices has fluctuated up and down, overall, they are still fluctuating near the cost price. So although these two stocks do not require much attention, we still need to take a look at them together. Like some people are always asking, oh, when can we do these stocks? I am usually on top of every stock that we recommend. So from time to time, even if there's not much an update, I still want to show that we're still on top of things. So Capacite. So Capacite Infra Projects Limited. So let's take a look at Capacite. We can notice that on Friday, the price of the stock adjusted along the index adjustment. Regardless of whether the stock itself is in a pullback confirmation after breaking through upwards, so the adjustment on Friday is theoretically not closely related to the index change. From a technical chart perspective, after the stock price broke through the high point in January this year, there was indeed a short period of price surge. But currently, it is still in the process of confirmation after the breakthrough. Only after this adjustment, the price can have a larger surge The development of things is always in a spiral upward trend, and stock prices mostly follow this pattern. Currently, the stock price is near our entry cost. There is no need to worry. Just wait patiently, quietly for the uptrend. So, not going to talk much more about the stock. Let's move on to the next stock. So, JK Paper. So, let's take a look at JK Paper. JK Paper Limited is a pulp and paper company engaged in manufacturing and sales of branded paper, cultural paper, and packaging boards in India and internationally. Although the company belongs to a traditional industry and is not a high-tech company, its operating performance is excellent. And the price has undergone a significant adjustment in the previous period. The valuation is also relatively ideal, so there is no problem in buying the company's stocks even now. From the technical perspective, the price of the stock has been adjusted for a full 2 months. Currently in an upward trend, it has already broken through the high point of the previous rebound on April 12th, and after the breakthrough, it has entered a period of strong sideways consolidation without even a real price pullback. Therefore, the trend of the stock is still very, very strong. Currently, there is no further rise, just in a strong sideways consolidation, and it is expected to rise soon. Also, not much we need to say about the stock. We're going to hold on to this, and we're going to wait for the rise. When it is time to sell any of the stocks, you will always be notified first. Okay, so that is going to wrap up our stocks analysis as well as the lesson for tonight, right? So I want to thank everybody for your continuous support. Please go over the content again, memorize it so you can apply it to your own trades. Some of these masters, learn what they teach us. You know, they have so much wisdom, so much knowledge to share, and I'm just taking bits. So if you want, do a little bit of your own research, learn a little bit more to increase your own trading strategies. Our next online live broadcast is scheduled for Tuesday, May 7th at 8 p.m. I hope to see everyone here again. Thank you very much to all my friends and members and your strong support, and I'll see you next time.